Hey legends, Shane here, founder of Capital Growth Traders, and today in this quick video, I just want to show you the basics of understanding a trending market and understanding a sideways market and what indicators we can use at a very basic level. Okay, so first off, we're going to be looking at the EMAs, and I am looking at the settings of a 10 EMA and a 20 EMA. And what these numbers mean is that this blue line is a 10 EMA and the purple line is a 20 EMA. But this is a data point showing the price, the average price of the last 10 candles. And this is showing the price of the last 20 candles on whatever time frame you're on. Okay, so this is showing us the average price. Now, if this 10 EMA is above our 20 EMA and we're pointing up in a nice direction, this is showing that we are in a nice uptrend. Okay, if the purple line if the purple line is above the blue line, this is showing us that we are in a downtrend. Okay, and we can do this on high time frames and everything like that. You can see we're in a nice uptrend here, and you can see we're in a nice downtrend here. So at a very basic level, if we don't understand market structure, we can see this as trending markets. Now, if you don't understand anything, if you're looking at buying and holding assets, then we're looking at a price to be above these lines and also our 10 EMA above the purple line, which is the 20 EMA. Now, if price is going sideways, right? Our EMAs will be pretty much flat. Okay, so we can see here price is going sideways up here and our EMAs are going flat. This is showing that there's no volatility in the markets, right? So I understand that markets will expand, right? And then they contract, so which means they go sideways. So there's indecision in the market. However, if we can notice that this is the trend, right? Then a high probability that this consolidation or sideways phase will continue in the same direction. Now trends do end, so this is where basics come into play with our support levels and our resistance levels as well, okay, which we can get into another time in another, episode or lesson. So just understanding our EMAs, how they will expand, right, in a trending market, and then we'll go sideways, and then we can expand again. So uptrend, sideways, high probability trade or high probability that will continue in the right direction. And then there will be a few key things that will show us that the trends end. But for now, markets are expanding, markets contract, and then markets expand again. When we go into a sideways action or a consolidation market, right? What this is showing us is that, there's no decision. There's no decision in the markets. People are buying, people are selling, they're taking profits, whatever it may be. And then the market is just going, up and down until someone makes a decision. Now, usually the decision comes in the direction of trend. We can go down and do this on all time frames as well. Higher the time frame, the better. Okay, so we can see here, let's just clean this up. We've got the market expanding, right? Market expanding, then we're going sideways. You can see our EMAs are pretty much flat and they're just whipping, and then we make a breakout to the top side and then we continue up. Okay, same sort of thing. Markets expand, we're going sideways, and then we continue out. Okay, same thing, markets expand, then we go sideways and we continue up. We can do this all day long. Markets expand, the EMAs go sideways, and then we expand again. Okay, so this is really good to show that if we're in a sideways market or in an expanding or a trending market. Okay, so hopefully this quick video helps you understanding trends and consolidation periods, and I'll see you on the next video.